Welcome to the weekly chart wrap up. Let's not waste any time. Let's get to it. All right, first up, we've got SoFi. I know I said last week there wouldn't be too much exciting coming from this stock. My expectation was that we'd just grind more into a point here, given the short report that we had and the high short interest in this one. Price hasn't managed to break down, which has been pretty impressive. On top of that, we even broke out to the upside. Granted, it's not the largest move. If we take a look, about 12% from its low, which sounds pretty modest compared to some of the moves stocks are making this week. But for SoFi, I'm going to take that as a win. We're now pushing upon this upside resistance here. I would have ideally liked to get above this bull market band, which is this orange band. It's quite thin, so it's probably going to be an easy one to break when it gets there. Typically, the thicker the band, the more resistance it has, as it ends up being 2 points as well. But like I said, happy with the overall action on this one. He did have an interview this week, which I believe is what led this price move. The interview, I did put a little breakdown of it on my website at www.thegraftytrader.com. Highlights are basically a bit of a spoiler. He's all but confirmed it's a beat and they're still profitable, so can't hate that. The only thing I think there's some issues or concerns around with based off the back of that interview is the credit risks and stuff, which seem to have been mostly what the short attack was about. Other key points on the chart, RSI still has room to go. Last time we had a run, we were quite comfortable getting to the 80 range on the RSI. Whales are starting to come in and wash out retail. That's exactly what we want to see. Still a long way off the 50% that is, the ideal kind of areas. Still looking quite oversold at this point. Banker flow looks pretty damn bullish. We had 2 buy signals and a nice pop on flow. Obviously, if we can get over this median line here at 50, it's off to the races, I think. But with earnings coming up, it's my preference would be just to get over this and turn this into support. Let's take a quick look at the options market for this one. Okay. Obviously, we've got earnings coming up on, let me just check when that is. There we go. 30th of July, so people are expecting price to still be range bound after earnings, which is interesting, given the short interest here and the low targets. I don't know. This could pop. This could get squeezy. We'll see. Don't take my word for gospel. I've been wrong many times. I'm famously terrible at timelines, but I get there in the end. Looking a bit further out, January 25. We've got $10 and $15, still the range that the bigger institutions are interested in, on the options market. And January 2026, pretty much the same with a bit more on 20. So it looks like people do expect this to do well when rates come down, which is nice to see. We'll head back to this chart. We can just take a quick look at the weekly, because I believe I forgot to do that a second ago. Apologies, the chart is a bit crowded. It's just because price is so tightly range bound here. Can't get all my notes in on the weekly. We had the def cross here, but it's not really expanded, so it looks like it wants to close to me. Other than that, RSI is neutral, flow pretty negative, but that could turn around quite quickly. Next up, we've got Tesla. We've had quite a large move here. It kept grinding hard. I kept thinking it's going to pull back here. It's going to pull back here. It didn't. This is what happens when you get a technical squeeze. The shorts start covering and price just keeps moving it. This isn't based on the fundamentals, although the initial move was. It's just happened that the shorts covering has caused the price to continue to move after the initial fundamental driver has given it enough of a pop. That happens when the expectation, obviously with the delivery numbers that caused it, was much lower. When they weren't as bad as expected, people got caught a bit short there. The RSI is a little bit overbought. We know that Tesla can run really high with this, but given this has been a technical move, I'd expect this to get enforced at some point and price to break down. That doesn't have to happen if enough people get on board thinking that this is a great level to buy. But purely technical, I'd say this would fall down more. The 235 area here that I did buy quite heavy here. And that was just a technical level, so you never know with Tesla. It could go either way. There could be some random news that comes out and it rockets, and I didn't want to not add at that level. Support coming down will be this black horizontal trend line here. It's been in play for a long time, and then it will be this volume shelf here and this gap here. Tesla does love filling its gaps, so this will be one to watch. I think we should probably take, given that earnings are coming up on the 24th of June, the 23rd of July, for the period of June. It's quite interesting because if we put it to the expiration after earnings, take a look what happens. All this interest in where's price going to go in this week. But if we skip forward, boom. The overwhelming expectation is that this earnings is garbage. If that doesn't happen, there's not a lot holding price down. And I'm not saying they are going to crush earnings, because it's going to be a tough one to beat given margin compression is still happening. They have lifted a few prices, but I don't think it's enough to move the boat. We know that energy is doing well, but again, I don't think that's at a level where it's going to have too much an impact. There has been an accounting change regarding energy. I'm on the fence if that's going to be coming into play this quarter. We'll see. So overall, be careful if you're going to play this one, because it could be quite choppy. If earnings is bad, obviously downside, we're heading towards that 180 level. But if it's not as bad as expected, this could happen again. So watch out. On the weekly as well, pretty much what we're seeing in the options market is just drawn out on the chart here for us. This candle here that looks like a plus sign, that's just indecision. The market doesn't know what to do with this one at the moment, and it's happening on a decent shelf as well. So I think wait until earnings. I'm not adding to this one aggressively, although if price does come down in the short term, I will buy. But ideally, I want to keep some dry powder on the side just in case we hit back into this area, because I probably will put all available cash into that trade. We've already talked about options. Weekly is it's getting overbought, but not there. We had a golden cross, which is a very bullish confirmation, as well as getting bullish flow. So if Tesla can deliver on the fundamentals, it's go time. If not, we're probably going to pull back a little bit on this one. Moving on to PayPal, another hated fintech. It's hated in a different way to SoFi. SoFi's had really good gains and given it back, whereas PayPal's just done nothing, and it's driving people mad. But I love it. I've been quite a happy bag holder for this one in a while. I think it's only a matter of time before vindication is mine. Around here, we did see some nice moves from the CPI print. Not mega, but nice to get back above this trend line. Obviously, this looks like a really baby head and shoulders pattern. Probably too small to be of interest, but a nice measured move to that probably gets us around it to this bull market band, which does seem to be widening, so it's going to be slightly tougher to break that level. Like I mentioned earlier, the thinner that is, the easier it is to break, traditionally anyway. Price targets for this one on me, I still sticking to 100. I think that is the intrinsic value number that I'm most interested in. I don't think I'm going to hold much past that level unless the advertising business starts coming up with some amazing numbers, but we'll see. Management's doing a phenomenal job. It's just not being respected by the market. It happens, and this mispricing is where we make money. It's just patience. I'm not currently adding to this one. I think I mentioned a few times before, this is my largest position across all of my portfolios. So it'd be pretty crazy for me to keep adding. I do have a decent average price on this one, so I'm not too worried about making it lower for the sake of a few extra percent gains on the upside. The Death Cross here looks like it's flattening out. And let me change the colour of this because it's pretty dark. You can't see it properly. Let's go blue. It's flattening out. It's starting to pinch back together. We love that. That means a golden cross could be coming soon. And with this bottom catch coming, which is normally a really good indicator for the bottom, ironically, and then this golden bar buy signal on the banker flow. I'm getting a good feeling about this one. If macro data keeps coming, I think this can grind up. We do have earnings coming on this one for the 30th of July, which I'll definitely be listening to that live. So I'm very interested to hear from the CEO again. I'd love for us to have a substantial move. I'm ready. I think everyone's ready to see this one do something. Weekly range on this one, it's still tight. It's just not going anywhere. It's got about a $10 range, which if we break that into percentages, it's a 15%. I mean, if you could time the trades on this one, you're probably doing okay. If it does come up and then back down again, chances are taking a swing trade at these levels is probably going to work quite well. Whales still not where I want them to be, but I mean they're hanging on in there. The fact that they've not gone away makes me pretty happy, if I'm honest. If we could take a look at the options market on this one. Move these markers out of the way for you. I mean, we're right where price wants us to be. I think some of these, given the short time frame on these, I think these are probably hit like legacy ones that just nothing's happened and people are just, they're not worth much, so people are just leaving them. But if we look at earnings, I think, what did I say? 30th of July. So this is the expiration after. Still pretty range bound, so not much excitement expected. That doesn't mean it can't happen. Bear that in mind. But if we take a look further out to January 2025, these are some high targets, even high by my standards, and I would think I'm quite bullish. But I think they changed going to 2026, which was interesting. They come down again. Yeah, so don't know why this is happening this way, but we shall see. I think there's just a lot of uncertainty with PayPal. People don't believe, and people can't read a balance sheet, but it is what it is. I'm still very bullish. I haven't seen anything that's made me think otherwise, and this company can turn the sentiment around. They just need time. Last stock we're going to take a look at is CleanSpark. This is getting to be a really tight range again. Obviously, a high of probably $20, the low of 50. That's a $5 range we're looking at. That is getting to a point here. I'm surprised it's still grinding lower given some of the action, but with Germany having done emptying its bags, hopefully we get a bit of a pop on crypto over the weekend, and that can really start moving some of these miners, because these are absolute steals right now. For anyone that's not in them, now is probably still a good time to buy. Let's take a look at the indicators. RSI is neutral. Death Cross came though. I think this is going to close pretty quickly. I wouldn't worry too much about that. And the banker flow is pretty negative. So the indicators are kind of neutral to bearish. But we have to remember with CleanSpark, it doesn't just trade from its own technicals. It's very heavily influenced from Bitcoin and what that's doing, and we'll take a look at that chart after this one, so we can get a better feel for how my proxy trades are going to go. Take profits on this one. I think I've mentioned a few times that I'm not really interested in trading in and out of this one. I've traded a lot around these levels, and I think we're getting ready for quite a substantial move to the upside. I don't want to be faffing around for a few extra percentage points when we start making the good moves. Obviously, I was happy to do that before we had the halving event, but I haven't really entered and exited. I've scaled back up to my 10% weighting that I wanted in this one. I'm happy to hold these until price gets right up there towards the $30 range. Anything between 28 and 32. This is kind of my kill box for some short-term gains. Probably take out my initial investment and let the rest ride, at least until Bitcoin looks like it's rolling over. Obviously, I made these marks here for a little bit of funsies. That's where I would guess price would go, but we'll see. Probably wrong. I'm not going to be trading these levels anyway, so haven't paid too much attention to them. Just thought it'd be something fun to do. Taking a look over at the weekly chart. It's going to be quite hard to see because it's quite rangy. Get rid of these so you can see. This just looks like a really nice flag on the weekly. Measured move for this one is probably quite big. I don't always measure the pole. Gets us to, funny enough, my target. So can't hate that. Confluence is what we love to see. Volume's been slowing off, and even these large this large sell volume hasn't been enough to pull price down, which that alone makes me quite bullish, to be honest. We can take a little look at the options chain for this one. Obviously, bear in mind you shouldn't be looking at taking any long-term options on this one. They'll be dated past the peak of crypto right now, so that would be a terrible idea. So if you're going to trade options on this one, probably stick to short term or not at all, because the volatility will destroy people. It's not advisable. Even I'm not trading these. Let's move these out of the way. Seems to be a lot more bullish sentiment in the short term, but not too much. Still quite a lot below. This is going to provide us a good launch pad. This 15 level is going to be a tough one to break below. We've seen that one hold here as well. Taking a look, we can have a look a few weeks out. It's not a problem, but I mean, to me, this looks like people are pretty sure this is going to pop, and the headwinds are now gone. Can't hate that. Love it. It comes in a bit after. I'm feeling pretty good about this one. Pretty bullish. I don't see if there is downside, I don't see too much more. But like I say, it's going to trade mainly based on what crypto is going to do. These companies are their own companies, and CleanSpark is executing particularly well with its acquisitions and upgrades. So their price is actually determined a mix of their own fundamentals and what Bitcoin's doing. We can see that a lot with all the miners that are getting on the AI train. For some reason, everyone's very excited about that. That's not a profitable industry right now. So you're getting on expensive prices when there's no profits. So you want to do it the other way around. You want to get in when it's cheap because they haven't grown into that new valuation. So I wouldn't be chasing those types of miners. I'd prefer to stick to the ones that have got a stack and are sticking to what they're good at. Finally, we're on to Bitcoin. There's been a lot of talk about Bitcoin collapsing here with the pressure from Mt. Gox and Germany. There's been a hell of a big flood of coins onto the market, but the ETFs have been gobbling up quite a bit of that. That's why price is holding on to this golden Fibonacci level here and this excellent wick. Could we still fall lower? Yes, but given that those big sellers are now done, I would expect to see more of a move to the upside. We do have a death cross open here on the MACD Plus. It is flattening out. It does look like it's going to start coming together. If there's no more headwinds, I think it's looking good for price to continue to get back to its normal curve post halving. That said, that's not financial advice, so make your own decisions. I'm just giving you the information that I can see and interpreting it in how I would as if I was trading. There has been a lot of large wallets that do get tracked that are buying aggressively at these levels. We do have the death cross here as well if we're looking at purely technicals. It is coming together again. Retail starting to fade out a little bit, but institutions aren't really stepping up yet. We do have a gold bar indicator on the flow here. I'm leaning towards bullish action on this, guys. If we see a nice pop over the weekend on this, I think we're good to go. Things should start improving. Very exciting. Can't wait to see how it goes. Obviously, if Bitcoin does well, it's going to affect all of the proxy trades, miners, Robinhood, that kind of stuff. The broader macro picture is looking a lot like it wants to go risk on as well. We've seen money start to rotate to the more risk on small cap stocks. Obviously, that will translate to miners and such as well. So things are looking good here from a technical and a macro level. It all needs to come together at the right time. Adding wise, I have been adding not in my eToro portfolio, but in my crypto portfolio. I've explained a little bit about that a few times. I basically don't want to store my coins on eToro, but if I take them out of the breaker, it's going to affect my copy sync and stuff. So I do comment a lot when I'm buying and selling on there to give you a better idea of what levels I like. But predominantly anything under this bull market band, this has been a gift. It's very rare to get an entry point like this post halving. So be grateful that a lot of people are affected by fear here. Love it. I think that's everything for today. Feel free to like, share, and subscribe. All that jazz, and I'll see you next week.